Hey everyone, welcome back to Corporate Decoder, the place where let's just say we'll be looking at something that glitters, but it is not always gold. And sometimes it is. Today we're diving deep into the abrdn Gold ETF Trust's Q3 report. For 2025, it is a look under the hood at how this trust is managing its precious metal investments. And trust me, there are some interesting numbers in here that tell quite a story. Before we get into the nitty gritty, if you like getting these no fluff, straight to the point financial breakdowns, make sure you are subscribed. And hey, we've also got a growing community over on our Discord, linked down below, where we chat about all things finance, so come join us. Let's kick things off by looking at the trust's financial picture. We're comparing the end of September 2025 with the end of December 2024. The biggest item on the asset side is their investment in gold. At the end of September 2025, the cost of the gold they held was over $3.2 billion. Now, that might sound like a lot, but by the time they're reporting it, its fair value, that is what it is worth on the market, has jumped significantly to over $6.2 billion. That is a massive increase from the end of 2024, when the cost was around $2.4 billion and the fair value was roughly $3.7 billion. On the other side, their liabilities are pretty small. We're talking about fees payable to the sponsor and some gold that is essentially owed. At the end of September 2025, these liabilities added up to just over $26 million. Compare that to the end of 2024, where liabilities were barely $500,000. This difference is mostly due to that gold payable you see. And this brings us to the net assets. This is essentially what is left after you subtract liabilities from assets. We see a massive climb from about $3.7 billion at the end of 2024 to over $6.2 billion by the end of September 2025. This jump is almost entirely driven by that huge increase in the market value of their gold holding. Now, let's talk about the value for the actual shareholders, the net asset value per S-share, which is what each share in the trust is worth, has gone from about $25 at the end of 2024 to over $36 by the end of September 2025. That is a really solid gain for anyone holding these shares. Let's look at the schedule of investments. This is where we see how that gold is actually represented. Here we see the details of their gold holdings. At the 30th of September 2025, they held over 1.6 billion ounces of gold compared to about 1.4 billion ounces at the end of 2024. The cost of this gold is sitting at over $3.2 billion in 2025, but its fair market value is a whopping $6.2 billion. This almost 100% increase in value in just 9 months is pretty remarkable. You can also see the liabilities here very small compared to the overall assets, so they don't really impact the net asset percentage much. Now, let's move on to how the trust made or lost money during specific periods. This section shows the ins and outs for the 3 and 9 month periods ending the 30th of September 2025 and 2024. The main expense here is the sponsor's fee. For the 3 months ending the 30th of September 2025, this fee was about $2.4 million, up from $1.4 million in the same period of 2024. For the 9 months, it's a much larger number, over $6 million in 2025 compared to almost $4 million in 2024. This fee is a percentage of the trust's assets, so as the value of gold increases, this fee naturally goes up. Because of these expenses, they report a net investment loss. This means that just from the fees, they are losing a bit of money. But here is where it gets interesting. They have realized gains from gold being transferred to pay for expenses, and also from gold distributed when shares are redeemed. These gains are quite substantial. For the 3 months ending the 30th of September 2025, they report a realized gain of over $39 million from redeeming shares with gold. That's a huge jump from just over $5 million in the same period last year. For the 9 months, it is even bigger, over $143 million in 2025 compared to about $30 million in 2024. And then Therese, the unrealized gain on their gold investment. This is the big mover. For the 3 months ending the 30th of September 2025, the unrealized gain was over $821 million. Yes, over $800 million. This is way up from about $406 million in the same period of 2024. Over 9 months. This unrealized gain is over $1.7 billion. So when you combine all these gains and losses, the total change in net assets from operations for the 3 months ending the 30th of September 2025 is over $871 million. For the 9 month period, it's a mind-blowing $1.86 billion. It clearly shows that the performance of gold itself is the overwhelming driver of this trust's success. This next section details the flow of shares and money in and out of the trust. We see a significant number of share creations, meaning investors are buying into the trust. For the 3 months ending the 30th of September 2025, almost 9 million shares were created, bringing in over $300 million. For the 9 months, it's over 31 million shares created, securing almost $1 billion. On the flip side, redemptions where investors are cashing out are much lower. For the 3 months, it's about 2.6 million shares redeemed, and for the 9 months, it's around 11.4 million shares redeemed. This net inflow of shares indicates strong investor demand. The opening balance for the net assets shows how much the trust was worth at the start of the period, and the closing balance shows the much larger value at the end, reflecting those massive gains from the rising gold price and strong share creations. Let's drill down into some of the per S-share performance. This part really puts the gains into shareholder terms. At the start of the 3-month period in 2025, the net asset value per S-share was about $31. By the end of September, it had climbed to over $36. For the 9-month period, it started at around $24 and ended at over $36. The change in net assets from operations per S-share for the 3 months ended was over $5, and for the 9 months it was over $11.5. This comes almost entirely from those realized and unrealized gains on gold. And the total return for the 9-month period ending the 30th of September 2025 was an impressive 46.35%. That's a huge return in less than a year. The 3-month return was also strong at over 16%. Now for some of the important notes that give us context. The trust itself was set up back in 2009. It is basically a legal arrangement designed to hold gold and issue these shares that track the price of gold, minus expenses. The sponsor here is abrdn ETF Sponsor LLC. The way they value their gold is pretty straightforward. They use the LBMA Gold Price PM, which is the afternoon London price for gold. If that is not available, they use the morning price. This is a widely accepted standard for gold pricing. They also talk about fair value hierarchy. For their gold investment, it is classified as level 1. This means its value is based on unadjusted quoted prices in active markets. In simpler terms, it's valued using the most up-to-date market prices available for gold, making it a very straightforward valuation. Here we see a more detailed breakdown of the gold ounces and their values. The ounces increased from about 1.4 million at the end of 2024 to over 1.6 million by September 2025. The cost of acquiring this gold is recorded differently from its market value, and as we've seen, the market value has soared. The sponsor's fee is set at an annualized rate of 0.17% of the trust's adjusted net asset value. This fee is paid monthly in arrears, and it is covered by transferring gold to the sponsor. As the value of gold goes up, so does the dollar amount of this fee, even though the percentage stays the same. This section is management's own commentary on how they see the company performing and its financial condition. They reiterate that the trust isn't managed like a typical corporation with lots of staff and active trading. Its main purpose is to hold gold and track its price, with shares available for investors to buy and sell on the NYSE Arca under the symbol S.Gold. Regularly, after the market closes, the value of the gold is determined using that LBMA price. Then, all accrued fees and liabilities are subtracted to get the net asset value, or NAV. This NAV per S-share is what investors see reflected in their holdings. Looking at the 9 months ending the 30th of September 2025, they highlight a significant increase in the trust's NAV of over 66%. This was driven by a 46.52% rise in the price of gold per ounce and an increase in outstanding shares due to more creations than redemptions. Surprisingly, the trust doesn't really have cash balances. Its only real source of liquidity is its gold. The sponsor covers most of the expenses in exchange for that sponsor's fee, so the trust doesn't typically need to sell gold for operational costs. This part talks about the risks involved. They mention that the trust doesn't borrow money for expenses and doesn't deal with foreign currencies or derivatives. So the main risk, as expected, is tied directly to the price of gold itself. And finally, the signatures show who is certifying that this report is accurate. Now, let's talk about what this all means. The abrdn Gold ETF Trust report for Q3 2025 paints a picture of a trust that benefited enormously from the surge in gold prices. The numbers show a massive increase in the fair value of their gold holdings, which directly translated into significant gains for shareholders. The net asset value per S-share jumped considerably, and the total return for the 9-month period was very impressive, over 46%. The structure of this trust, where it primarily holds gold and its expenses are managed through gold transfers, makes its performance almost entirely dependent on the price movement of the precious metal. The large number of share creations also signals strong investor interest in gold as an investment during this period. A key takeaway here is the sheer power of gold as an asset. When it performs well, trusts like this shine. The report clearly shows that the gains are driven by the market price of gold, not by active trading or complex financial instruments. The sponsor's fee, while an expense, is relatively small compared to the gains realized from gold appreciation, and importantly, the trust itself doesn't have much in the way of traditional operational expenses. Now, a word of caution. While this report shows fantastic performance, it is crucial to remember that gold prices can be volatile. A significant drop in the price of gold would, by extension, mean a significant drop in the value of this trust. The report itself categorizes this as a concentration of risk, and that is truly the biggest factor to consider. The trust's sole business is investing in gold. So all its eggs are in that one shiny basket. Investors need to be comfortable with the inherent risks associated with the gold market, including global supply and demand, inflation expectations, currency fluctuations, and geopolitical events. In conclusion, the abrdn Gold ETF Trust has had a stellar 9 months ending September 2025, thanks to a strong bull run in gold. It is a straightforward investment vehicle, and its success hinges entirely on the performance of gold. If you are looking for direct exposure to gold and are comfortable with its price volatility, this trust appears to be delivering on its objective. However, always remember to do your own research and understand the risks involved before investing. Alright, that is our deep dive into the abrdn Gold ETF Trust's Q3 2025 report. What are your thoughts on gold's recent performance and the future outlook for this ETF? Let me know in the comments below if you found this breakdown helpful. Give it a thumbs up and subscribe for more financial insights, and don't forget to join us on Discord, link in the description. Thanks for watching, and I'll see you in the next one.